everybody, when they buy a Bitcoin Treasury company exposure, their journey starts on that day. They're not looking at the past performance of the company. Their journey starts on that day. And if your journey starts on that day, you should be looking at this as a long-term view, just as you would with Bitcoin. If you look at Bitcoin, the 4-year compound annual growth rate of Bitcoin, every single 4-year return period is positive. So if you take that same perspective for Bitcoin Treasury companies as this is a duration asset, I want to hold this for the long term, and I take a tailored risk-forward approach to it, you can sleep easy at night having some exposure, understanding like what the companies are working for you. So I think there's a lot of value in having exposure to these Bitcoin Treasury companies for what they're doing to the industry and how much value they're accumulating as a company. And the last piece I'll leave you with here is, like, I bring this question up a lot. What is the point of holding any equity? In my opinion, the point of holding any equity is to store value. What's more valuable than companies that have more store of value than companies that don't have the store of value? So that's kind of how I see the market.
This episode of the Bitcoin Economy is brought to you in part by Ledin.
Need cash but don't want to sell your Bitcoin? Ledin is the global leader in Bitcoin-backed loans, issuing over 9 billion loans since 2018. And they were the first to offer proof of reserves.
With Ledin, you get custody loans, no credit checks, no monthly payments, and more. Visit ledn.io for more information. Welcome back to the Bitcoin Economy. I'm here with Jeff Walton. You guys may know him from the podcast True North, as well as most recently, now you're the VP of Bitcoin strategy over at Strive Asset Management. So super excited. We've met you now at a few conferences and going to be hosting a happy hour with you guys tonight. So that'll be fun. But I want to talk to you just first and foremost with this new title. And it's so cool to see all these podcasters. I don't want to, relegate you to just being a podcaster because you're obviously brilliant, but it's cool to see all these podcasters now get on board seats. You see Natalie Brunell, many other people as well. What are you doing with the new role?
Yeah, so I'll take this from you. New role, the VP of Bitcoin strategy here at Strive. There's a lot to be done here, right? We're looking at being public here very shortly with the reverse merger closing.
Vote yes.
Vote yes, ASST, if you see this. And there's a lot that actually happens behind the scenes when you're going through the process of buying Bitcoin, custodying Bitcoin, thinking about the strategy of how do I potentially leverage this in the future. What does that look like? What does the timing look like? Who do I need to talk to? What does the legal counsel need to look like? How do I structure it? How do I communicate this to the market? What's the best form of communication to the market? What's the timeline of the whole thing look like? So thinking through what is the strategy from start, day one, once a transaction closes, to what does this look like a month from now, 2 months from now, 3 months from now, 6 months from now, and thinking through that entire strategy. So that's what I've been working on a lot recently, plus getting involved with the company, getting to know the people on the team, which very strong and talented team at Strive. A bunch of people with different backgrounds of working in finance. So everybody's communicating very well, very effectively. And there's not much learning curve for the rest of the team. So it's been a ton of fun, and I think it'll be a good time moving forward.
And I think your listeners have grown with you, right? Like you get educated alongside it. My old podcast was mostly on equities. And so I'm super excited about these Bitcoin treasuries now because the audience can kind of pay attention. Take probably a step back from your normal audience. But what is why would someone invest in a Bitcoin treasury versus just buying Bitcoin themselves? And like, why do you think the difference between, what Strategy's doing versus Metaplanet versus all these other ones that are out there? Where does that alpha come from? Where do you make more money than just buying Bitcoin?
Yeah, it's a great question. And it's a question that a lot of people are asking right now. And I think foundationally and core, everybody should own Bitcoin. If you're interested in the space, if you have the time, the energy, and the money to own and self-custody Bitcoin, I'd suggest everybody should do that as a base layer. And if you're looking to leverage or get some additional exposure on top of that, it is most efficient to have exposure to one, if not all of them, in different forms and different sizes. So I subscribe loosely to Markowitz Modern Portfolio Theory. So Markowitz Modern Portfolio Theory, if you're unaware, it is the efficient frontier. So effectively, if you have a portfolio of diversified assets with different risk return metrics, you can improve the return and reduce the risk of your entire portfolio. Now, if they're all correlated to Bitcoin, maybe it's a little bit different. But I think if you're taking a long-term perspective and a long-term view, understanding that these corporations are working for you to compound your Bitcoin holdings, it's an interesting value proposition. Now, a lot of people have been yelling recently about the lack of fiat performance on a short time horizon. And I think one of the things that's happening in the space is everybody, when they buy a Bitcoin Treasury company exposure, their journey starts on that day. They're not looking at the past performance of the company. Their journey starts on that day. And if your journey starts on that day, you should be looking at this as a long-term view, just as you would with Bitcoin. If you look at Bitcoin, the 4-year compound annual growth rate of Bitcoin, every single 4-year return period is positive. So if you take that same perspective for Bitcoin Treasury companies as this is a duration asset, I want to hold this for the long term, and I take a tailored risk-forward approach to it, you can sleep easy at night having some exposure, understanding like what the companies are working for you. So I think there's a lot of value in having exposure to these Bitcoin Treasury companies for what they're doing to the industry and how much value they're accumulating as a company. And the last piece I'll leave you with here is like, I bring this question up a lot. What is the point of holding any equity? In my opinion, the point of holding any equity is to store value. What's more valuable than companies that have more store of value than companies that don't have the store of value? So that's kind of how I see the market.
Kind of interesting question. You guys were MSTR True North right before. I know you guys have now changed it to True North. Do you feel like now that you're with Strive, is there like somewhat of a conflict when you're talking, or how do you handle that? Knowing kind of behind the scenes, still you're allowed to obviously as a human invest in strategy still, but like, is it like, have you noticed yourself having to like change your tune at all, or think a little bit before you answer questions now?
Yeah, it's I had a meeting with Michael Saylor at Strategy World, 30 minutes one-on-one, and we were just talking about True North and, you know, a few other things. He said, just drop MSTR, just be True North. This is at the time where they dropped micro. They dropped micro off of Strategy. And I said, why don't we just call it North? They're like, let's just drop True and we'll just call it North. Like North is going up, right? It's going higher. And so that was kind of the evolution of where True North is going. Also, people refer to us in the market as just True North. So we just kind of leaned into that. But I don't think there's a conflict of interest at all. What's the phrase, like, imitation is the highest form of flattery, or
Rising tide,
rising tide. And it's like, you know, and Saylor says this really well, like find the best idea and do it or follow it. And they're laying the playbook for us to potentially follow it. And we can learn from the 5 years that they've now been in the market of like what worked, what didn't work, what worked well. Can we do things a little bit differently? Can we be a little bit more dynamic and flexible? And the answer is yes to all of those. And we have been learning. We've got some unique perspectives on the marketplace. And I think we can learn from that. And we could continue to build and grow with them. So, you know, I think it's a potentially Robin to the Batman sort of scenario where I think there's a lot of potential synergies. Yeah.
I also think that they're almost like the fullback for everyone else, right? They're battling. They're the biggest fish in the pond, right? So they have to, you know, anything legal wise, they're going to get hit first. They're going to be in the headlines. And so you guys can take those learnings and be able to operate more like a jet ski while they're like this oil tanker in a sense right now.
They've like lifted the ceiling so people can operate in the market. So yeah, it's like they pulled everybody up, and now all of these other Bitcoin Treasury companies can go like operate on the fringes, you know, and like Strategy's getting the fixed income market, and all of these other companies in different countries can go and, you know, tackle different pools of capital.
All right. So talking more about like strategy, they've now, you know, they have Strive, they have Stripe, they have Stride, Strife, Strike. It's a whole stretch. There's a whole list of them, right? Can you talk to me a little bit about like the ATM and some of the preferred that you're seeing from there? And is this something you guys are looking at with Strive?
Yeah. So there's a really big innovation that's occurred here that I think often gets really overlooked, and it's Strategy's ability to ATM the preferred instruments. And the reason this is so powerful is that they're able to raise debt-like capital and refinance debt daily. Typically, if you wanted to go refinance debt, like let's just say you wanted to go refinance your home, what's the process of refinancing your home? You got to go, do the financial colonoscopy. You got to go talk to the underwriter. You got to show them all your finances. You got to go through the process. They got to go get it approved by their boss, and you go make a pitch. Basically, same thing happens in big capital markets. If you wanted to go refinance your debt, you got to go do a campaign, and that takes time, energy, human resource, and like the people to do it. Now, if they like the rate, they issue more equity.
Yeah.
And that capital comes in the door daily. It's zero human resource. It's like the machine is now in place. So like as capital is coming in the door, if there's increased volume or increased energy or liquidity in the equity, they can issue more and bring in that capital daily. So a lot of people have talked poorly about the low relative numbers of capital that they've been raising on the ATM. But the fact that like last week, I think they raised $40 million on Strike and Strife. And $40 million is $40 million. It's like, that's serious capital, and that can scale. That can,
Them, it's a drop.
it's a tiny drop in the bucket from the grand scheme of things. But the thing here is the scalability without any additional resource. Like as the market begins to understand these products and these instruments, and that capital comes in the door, and those instruments start to price up, they can issue more. And they can issue more and bring that capital in a very short period of time. You're taking this task that would have originally taken 2 months, maybe less time, maybe a month, and you're shortening that task down to a day. And that's a huge innovation that often gets overlooked. Now they have these tools where if you like the equity market price, you ATM it, you raise equity capital. If you like any of these 4 other debt instruments, the price of those, you ATM it and you raise the capital. So they now have 5 tools,
Right.
let alone, and the convertible bonds. So 6 tools at their disposal, which will experience different things at different times. So like depending on market conditions, they can use the tools at different times to capitalize on different things.
What if you could lower your tax bill and stack Bitcoin at the same time? Well, now you can with Blockware. New tax guidelines from the Big Beautiful Bill will allow American miners to write off 100% of the cost of their mining hardware for a single tax year. That's right, 100%. Blockware's mining as a service allows you to do everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day while also saving for the upcoming tax season. Get started today by going to mining.blockwaresolutions.com/TBE. Again, that's mining.blockwaresolutions.com/TBE. Now back to the interview.
Yeah. So
A lot of brain power on that team to figure that out and go through them. And I was at Strategy World, and the one thing I loved is all these different products that they're releasing. I'm like, okay, now this is the financialization of Bitcoin. Why we named our podcast The Bitcoin Economy, just seeing like Bitcoin's going to be the new money. There's life insurance now. There's a million different things you can do. I want to talk to you because I just heard Matt talk, and he said, you guys are one of the only companies that have zero debt. And that's like, to me, that's massive, right? Like that's huge. Like obviously Sailor's got so much Bitcoin. If they had to, they could, sell, but I don't, there are other ways to do that as well. But for you guys having zero debt, like what does that mean for you guys in the future? Some of the optionality, I know that they were talking about, being able to buy other companies and to get additional, to increase the MNAV when they want to as well. So would love to hear like from you on that point. And then, let's do that question first, and then I have a follow-up.
Okay, yeah. Okay, so, raise $750 million of equity capital that will close with the transaction, vote yes, ASST. And the unique part here is no debt, no leverage yet.
Okay.
We want to take on leverage. We want to leverage the Bitcoin on our balance sheet, but we want to be very tactical in the type of leverage that we issue to the market. A lot of the other Bitcoin Treasury companies have started with convertible debt, which convertible debt's great. If the market's there and available and you're able to raise convertible debt, great. But some of the concerns with the convertible debt are the terms. And the terms for some of these like Bitcoin Treasury companies have hardened drastically. and they weren't very appealing or attractive to Matt at the time when he was going through that process. And I'm glad that they didn't take on any of that debt, because there are now new forms of leverage, i.e. the perpetual preferred instruments, that are incredibly attractive when thinking about the type of debt leverage to take on. Like, if you had the opportunity to take on term debt or like debt that never matured, what would you do? I mean, personally, I would rather take a loan that I would never have to pay back. Like that, I would rather take that and pay that over time, especially if this is a one-way trade where I'm taking that capital in the door, I'm buying Bitcoin and it's CAGRing at 50, and my initial issuance is 9%. And that 9% or 10% or 11, 12, 13, 14%, whatever it is, priced in dollars, it's a fixed dollar per share that is effectively decreasing in value over time at the compound annual growth rate of debasement. So you've got like these two forces that are working in the opposite direction. Your fiat liability is decreasing at 6.5% compound annual growth rate, and your asset is compounding at 50. So that's just like that's a huge arb that anybody would take any day. A lot of people have been saying like, oh, how are they going to pay the dividend, or these interest rates are so high? It's like, well, the balance sheet is so strong. If they ever needed to, they could sell a Bitcoin. But
Would that have a ripple effect though?
the point is, your balance sheet is so strong, you can always get a deal done.
Yeah.
There are always deals to be done in the market. And a true testament of how good of a financier you are is like how you going to go get deals done.
Yeah.
And if you're sitting on assets, you can always get a deal done. And so that to me is what's unique to Strategy, what's unique to Strive, what's unique to these Bitcoin Treasury companies. And I think they have real staying power because they will always be able to get a deal done because of the asset that they hold on the balance sheet.
Last question. I just want to double down on what you were just talking about with the debasement. And that was something that stuck out to me when Saylor was talking about it when he walked into Microsoft. And he's like, you guys are losing money every single year. This money is just sitting on your balance sheet. How much do you think the price of Bitcoin, I think maybe you said this, and I started thinking about this the other day, where it's like Bitcoin's price is somewhat going up because the price of the dollar is going down, right? So it's more dollars that effectively have to do that. How much do you think is it debasement versus, the people just buying more Bitcoin and the value, of that? So I'd love to just like tap it to that.
Yeah. I mean, obviously the global monetary supply is going up. You can go look at any and all of the numbers and you see it. There's just more dollars in circulation, and that's going to filter its way to hard assets that are looking to store their value into perpetuity. So it's not just dollars, it's happening globally. And so I don't think we've experienced the euphoria yet. Like this is a bull market, but I don't think it's really kicked into gear. And you can really see it if you look at the Bitcoin gold chart. If you look at the Bitcoin gold chart, we're really close to all-time highs in Bitcoin priced in gold. And if you look at historical Bitcoin rallies, there's a significant deviation. Typically gold has led and Bitcoin follows, and Bitcoin priced in gold will have a significant deviation. And we're like teetering on that potential here on the horizon. So yeah, a lot of excitement here.
Yeah. I guess the last question too that a lot of my friends ask me, because you got Donald Trump talking about this, you have all these treasury companies buying. You'd think Bitcoin would be at $1 million right now. So is this just whales selling off, or is this ETFs selling off? There's a lot more movement here. Like, why does that happen where Bitcoin, I mean, it's gone up, right? And pretty significantly, but not at the scale with everything. There's this whole groundswell of everything happening at once here. So why do you think that maybe, what's stopping it from shooting up to 150, 180, 200,000, like Jeff Park says by the end of the year?
Yeah. Well, I think you've got a huge confluence of things that are happening in the marketplace. I mean, obviously AI is getting a lot of attention. You could go look at any of the AI equities. NVIDIA is now a $4 trillion company, first $4 trillion company we've ever seen. And so like that, I think is taking a lot of capital from the market. A lot of the euphoria has been there. Okay. Obviously, we got some big whales that have sold recently. I think there was that whale at the Galaxy that sold 80,000 Bitcoin. Like the price didn't really move, which just shows you how liquid and deep the market is, which is just honestly incredibly impressive. And I think we'll continue to, as those Bitcoin go from OG long-term holders and get distributed to Bitcoin treasury companies that are never selling and different corporations and nation states. I think that only solidifies and strengthens like the Bitcoin core value into the future. Also, I really don't think, I mean, we're here at Bitcoin Asia. There's supposed to be 20,000 people here, which is crazy. That's a lot of people. Last year, there were 4,000. And I don't think retail is really here yet.
I agree.
And the reason I say that is because there's this huge nominal bias thing that's happening with like all of cryptocurrencies. I mean, people look at Bitcoin, oh my God, it's too expensive. I'm going to go buy XRP at $2, right? Like they lack that cognitive flexibility to push through nominal bias. But I think that may change at certain price points. I think breaking 200,000, you might get another group of people that are coming into Bitcoin. But I think the next big number that really scares retail a little bit is around $400,000. Around the average median home price in the United States, I think people will begin to wake up a little bit more and say, oh my God, Bitcoin is now worth a house. Yeah. And I think that will really make a lot of people ask the question, why? And, you know, in past cycles or even recently, like the last year, a Ford F-150 was more expensive than a Bitcoin.
Yeah.
So
there's that image of the houses, how many Bitcoin it costs.
Yeah. How many Bitcoin does a house cost? And that's, you know, constantly going down. And when that drops below one, I think people are going to say, oh my God, I'm late.
Yeah.
You know, I'm late. And I think we're going to see a flood of capital come in the door when that happens. Also, like these fixed income securities that Strategy has designed and developed can onboard trillions of dollars of capital. The market hasn't figured them out yet. We're definitely early days in the creation of security. I like to think we're like the 1970s of mortgage-backed securities. Mortgage-backed securities went on an absolute tear until 2008. From the creation of the mortgage-backed security to 2008, they went on an absolute tear. And I think that's where we're approaching now with Bitcoin securities. And I think there will be a landslide of capital that comes in the door once they recognize how liquid these instruments are, how good a performance they have, and the relative credit quality is significantly better than anything else in the physical market. So,
yeah, I think another piece for retail too is like one, I just spoke with someone recently that they were talking about how we need to start talking in Satoshis, because for someone to spend $120,000 is a lot different. You know, if I have $5,000 to my name, you're going to be scared off. But if you're like, hey, buy 100,000, buy 200,000 Satoshis. And then I think the other big factor here is lending. I think that's really opens the door up to be like, okay, I can pull some money out when I need it, but without having to sell my Bitcoin. That's going to be another big thing. And then I think just as more and more businesses accept Bitcoin, it becomes more of this economy. It's funny too, because my dad's always like, can you buy a car with Bitcoin? I'm like, well, actually now you can somewhat. And life insurance, you can do a lot of things. So I think more and more of those companies will start to pop up, and yeah, we'll validate Bitcoin even further. Anything else you want to touch on? I know we've been chatting here for quite a bit, but
I got one more thing. I'm just thinking about the Bitcoin economy and like the evolution here is, I think the sad reality of some of this space is a lot of people are never going to self-custody Bitcoin.
Yeah.
So why? Because it's complicated, it's risky, you can lose it, it's scary.
Sure.
Cyber attack, like there are a lot of risk vectors. Like the concept of Bitcoin, right? Be your own bank.
Yeah.
Well, the reality is most people probably shouldn't be their own bank. All right, like you know,
Money in a mattress.
yeah, you know, this is like most people probably shouldn't be their own bank. So how do you get them the benefit of this commodity in a way that they can benefit from it without having to, you know, like actually hold it and be their own bank? And like that's where the securitization of Bitcoin, these new fixed income instruments, I mean, the IBIT ETF, like the Bitcoin ETFs, I think become incredibly appealing. Again, they're not for everybody, but they're going to provide that necessary conduit to getting this exposure. So that's what, you know, a lot of the Bitcoin maxis are like, just buy Bitcoin. Well, it's like, yeah, that's great in theory, but it's not very practical. So I'm bullish on these new ways of getting people the exposure that they should have in the portfolio.
Yeah. And if we ever get to that point where you like need to run on a plane and with your Bitcoin, we got a lot of bigger problems to deal with. But I think you touched on something really important. And I just bought, 1,000 shares of IBIT because I was trying to figure out how to, move that over. But I have a bunch of money in my 401k or your IRA. All that money, you can go to Unchained, you can go to a few of these companies to buy your own Bitcoin. But yeah, that's a lot of paperwork, a lot of thought that has to go into it. Do you have time to like sit down and do all of that? Or I can click a button and buy Treasury, or I can buy that. And there's, I think, $10-20 trillion moving over in the next like 10-15 years or something crazy. So all that money is going to start to go to treasuries, go to IBIT and everything else. So anyways, thanks so much for coming on, Jeff. Always a pleasure. See you tonight, and be well.